Today, I'm interviewing Joshua Siegel, General Partner at Rubicon Venture Capital, a Bicoastal venture capital firm where he evaluates early-stage tech companies. He will speak about the things he likes to see in foreign startups to consider for investment, and will share some advice for those entrepreneurs contemplating transitioning into the US market. Don't forget to like, subscribe, and leave your comments. I am Elena Fernandez, and this is Startup Hub New York City Interview Series.
Fifth floor, complaint department.
Shot 2B, take one.
Rolling.
1, 8, 7, 6, 9, 4.
Rubicon Venture Capital is a bicoastal San Francisco, New York City venture capital firm. We invest in later seed, Series A and Series B rounds of early stage technology companies. We invest only in software, internet tech, in the mobile, Internet of Things, big data, enterprise SaaS, fintech, hospitality tech spaces. I guess I wanted to become a VC for probably the last 20 years or so, except I didn't know that then. It was in 07 and early 08 that I decided that I was going to be an angel investor, and subsequently I grew into being a venture capitalist because I love working with lots of different companies, lots of different people. It's constantly changing, you're constantly learning, and that appeals to me in a great way. We do have a thesis approach that we like to see certain things, such as a minimum viable product, a solid team. We like to see product market fit. We like to see prudence with the use of capital. So entrepreneurs need to raise a certain amount of capital so they have a good 18 plus months of operational runway. Even more importantly, I think, than all that is the ability to scale. They have to be able to take their product and scale out. Now, you have to have a plan, you have to have some traction, and especially if you're coming from outside the United States here, you have to demonstrate that you actually can do what you want to do here. You really do have to know your market. You have to know the customers that you're going to attack. You have to know their thought processes. You have to know the sales cycle. You have to know where you want to be in the United States, depending on what you're selling. Typically, you'll also need a good, solid venture capital firm backing you so that you have solid reputation in the market, so that customers don't think you're just going to pick up and leave the very next day. Decisions for most of the financial investments around the world are made in New York. The challenge is it depends on where you are in the life cycle. If you're very early, it's great. If you're in the middle, it can be a little tough because there's not as many venture capitalists operating here as on the West Coast. It also depends on what industry you want to be in. If you're in ad tech, if you're in fintech, if you're in fashion tech, if you're in hospitality, New York is the place to be. It's bringing together a great network, which is really critical because your network is your strongest resource. You need to be able to mine that network, understand it, so that you can get connections to people, you can get introductions, you can circumvent the decision-making process at whatever firm you're going after, and Startup Hub is really able to do that. They're also well connected, so you have instant credibility when you're on the ground, which is great.